Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to this week's episode of the Tax Talk with AJ. The show brings you all the things that you really need to know about taxes, but also beyond taxes. During a tax season, it's the taxes. There's always time to talk about taxes, but then we go beyond taxes also in order to bring you information which is in a way related to the taxes, because we all have to pay taxes and taxes are the most essential. During this time, in case if you have filed an extension, the time is coming very soon that you need to file your tax return. And for any advice, suggestion, any assistance that you need, reach out to Sai CPS Services, as they are the proud sponsor of this show, the Tax Talk with AJ, right here on ITV Gold. And Sai CPA Services, with multiple locations in the state of New Jersey, they can assist you anywhere for any tax matter, corporate, personal, and even for the your corporation. If you need virtual CEO, CFO, and payroll manager, they can assist you in all those departments, and they've been doing it for over 25 years. Their experienced and knowledgeable staff, CPAs on hand, can guide you in the right direction. Sai CPA Services, you can give them a call at 908-888-8900. That's a 908-888-8900, or visit their website, saicpaservices.com. With that note, I'd like to welcome Mr. AJ, backbone of Sai CPA Services, to the show, CPA, MBA, and expert in valuation. That's Mr. AJ. AJ, good to have you in the show.
Thank you, Sanjeevji. Thank you for the kind introduction.
You're very welcome. And of course, Sai CPA Services, makes taxpayers very, very happy. More than happy, I would say satisfied, because Sai CPA Services believes in doing taxes right. Refund, no refund, that's a different thing, but do your taxes right. All right. So as I said, that besides tax, we sometimes go beyond taxes also, and then I bring you a lot of information that you need to know. If you are a business owner, and specifically a small business owner, you want your business to grow. You want your business to succeed. You're working hard for that business. You started that business because you have a passion. You have a dream and everything. Now, in order to make that business very successful, of course, the health of business is important. Just like health of our body is important, health of business is important, and that health of business has to do with financial statements, profit and loss, and a balance sheet. And on top of that, the valuation of your business is the key thing. How valuable are the valuation reports for these small businesses? That's what we're going to find out. A lot of details from AJ.
Absolutely, Sanjeevji. So one of the key factors for a small business owner is to know how much is their business worth. And more importantly, not just knowing how much the business is worth, but knowing the attributes, the variables that make a business worth more than others. So if you look at two grocery stores, a branch of ShopRite is a well-oiled machine, as opposed to if you look at Sabji Mandi, Apna Bazaar, or India Bazaar. These grocery stores, they are not as well-oiled machines. So if you look at the market, for the same amount of sale, a ShopRite model will fetch you a lot more money than India Bazaar, Sabji Mandi, Apna Bazaar type of model. So knowing what factors help you increase the value of your business is extremely important. As much as you want to grow the business, you want to keep the exit strategy in mind. Or once you have larger value for the business, a lot of banks will be happy to give you more money. So you can open the next branch, next location. So valuation is an extreme focus for a lot of small businesses, especially the IT consulting company, where they know that certain multiple of EBITDA, if you have heard the term EBITDA, or discounted cash flow, or market compare, there are a lot of models around it. So when we talk about business valuation, we typically look at three different valuation schemes. So there are a lot of valuation models that you can use to create valuation for a small business.
Correct.
Depending on the type of business, you have to choose three best methods for valuation that helps in this type of industry. And then you go through certain caveats, certain reports that we'll explain in this show. So for your small business, your type of industry, what you need to be mindful about, what can you do today to make your business worth more 3 years from now. Some of these things can be implemented immediately. Some of these things will take time to implement. But keeping the focus on the exit strategy, keeping the focus on the valuation, and working on the factors that will help increase the valuation is what we are going to talk about in this show.
Okay, and keeping one more thing in the mind also when it comes to small business valuation, and I'll come to that in a second. Viewers, I just want to let you know that AJ has that degree called CVA, Certified Valuation Analyst. Besides CPA and MBA, he is a Certified Valuation Analyst. That means he is knowledgeable in preparing a valuation report for a small business. AJ, my point was, for small business, valuation can be a game changer. Okay, when you want to grow business and you want to succeed in everything else, but having a valuation can also help to get attention from financial institutions when you need business loan, when you want to expand, or let's say you want to go into a franchisee and everything. A lot of things depend upon the valuation, and that's why it's important. Now, my first point to you is that mergers and acquisitions. How does a valuation fall into mergers and acquisitions category?
Absolutely. So when you are thinking about M&A mergers, you want to merge your business with somebody else, or you want to acquire their business, having a third party fair valuation will put you in the right spot. So sometimes people ask us, I'm trying to buy this business. They're asking for 2 million. Is it too high or too low? We don't know. If the real value of the business is 5 million, then 2 million is a great deal. If the real value of the business is 500,000, then 2 million is terrible. So just by looking at the number that the business is asking for, or the seller is asking for $2 million, that doesn't mean anything. But if you knew a third party valuation by a certified valuation expert, then you can negotiate. This certified valuation expert gave you an 80-page report, did the valuation in 3 different methods, 3 different ways, compared a lot of sales of this type of business for this type of size in this industry that happened in last couple of years. And based on that, if they tell you this business is worth, let's say $2.2 million in this example, now 2 million is good. Knowing the actual value by a third-party valuation expert will put you in the driver's seat to negotiate the right value, or at least you will know that you're getting the right deal. It gets better. Let's say if the valuation expert says the deal is $2 million and you're getting it for $2 million. Now you can take this valuation expert report to the bank that I'm trying to buy this business. This is the valuation expert. They are saying it is $2 million. I can bring in $500,000 down. Bank will be happy to give you the loan as much as sometimes 70%, depending on bank to bank. If you are bringing some money down, as long as you know the value of this business is X amount of money, and that has to be justified by a certified valuation expert.
So how do you determine the fair market value?
A great question. So depending on the industry, depending on the size of the business, so there are 7 different methods for valuing the business. Depending on the industry, depending on the size, depending on the geographical area, we'll choose typically 3 areas. So let's look at EBITDA model first. We call it cash flow model or discounted cash flow model. So we look at how much profit, how much money this business is making. If this business is doing $1 million sale, how much is the earning before interest, tax, depreciation, amortization? What's the true cash flow? And how much the cash flow going to be for the next 5 years? As much as history is important, we are buying for the future potential for the business. So we'll do the next 5 years projection with a terminal value. Then we will bring the value down to present value. We call it discounted cash flow model. Based on that model, we'll see if you invest $1 million in this business, every year you can make $250,000. So in 4 years, not only you will recoup your money, you have a business that's worth more than $1 million, and then you can keep making money for the future. That's discounted cash flow model or EBITDA multiple. This is how they generally refer that in the marketplace. The other way you look at, depending on the type of business, depending on the size of business, there are business database. There are a lot of business database, BizCom. There are several business database that you have to buy the subscription. They are not free database. So you put in the industry, you put in the size of the business, you put in the geographical area, and this database will provide 10 similar model, 10 comparison where you have the similar size, similar industry, similar geographical area as how much these businesses were actually sold for. Based on that statistics, it's more like home sale. When you are trying to sell the home, a valuation expert or home appraiser guy can look at the comparison in that area with a similar size house as how much other houses are sold for. So a similar model, and based on that model, you can say, well, even though based on the EBITDA model, the valuation is 700,000, but right now there is a scarcity of these businesses, a scarcity of the houses, and all these houses are sold for 750, 760. So that's another method.
Well, yeah, if you're bringing houses into this picture, obviously, let's say if houses appraisal report is $500,000, right? That's appraisal that the owner gets. But that house could be sold for 550, 600, because depends, how good the house is, where it's located, and everything else, and how desperate the buyer is.
More than that, when it comes to business, it's more of the synergy.
Yeah.
Let's say if I already have 3 Indian grocery store, if I were to buy 4th Indian grocery store in an area, I can buy the supply in large wholesale volume and distribute to the 4 stores. So I have certain synergy around it. That's when the buyer is willing to pay a little bit extra money than a little bit lesser money.
Okay. All right. Very well said. Folks, we are discussing, business valuation for small businesses, that how business valuation can be a game changer for small businesses. That's the topic in today's show, The Tax Talk with AJ. We're going to take a short break, and when we come back, we'll definitely have more on this topic from AJ right here. So stay with us. Welcome back to the second half of the Tax Talk with AJ. Viewers, by now you know that what the show is all about, and we thank you for tuning into every week, and thank you for your positive response and the comments that we are getting it. Once again, the show is brought to you by Science CPA Services. Moving on to this topic, which is very interesting, valuation for small businesses. So AJ explained, from the start of the valuation and up to all the fair market value. Now let's continue this conversation. What if business is into the litigation and other legal matters? How does this valuation or the future deal of that business would come in effect?
Absolutely. It depends on situation to situation. So let's say if there is a shareholders dispute, one shareholder wants out, or you want to sell certain shares. It's a privately held company. It's not public company where all the share values are publicly listed. So how do you sell 20% shares of a grocery store unless you know the value of that business? So knowing the value of the business is extremely important when you have shareholders dispute, trying to get a new shareholder, trying to get new funding, or if somebody is trying to use the same name. You say you have India Bazaar as the business name, somebody is trying to open India Bazaar. But how do you know how much the brand, the trademark that you have, India Bazaar, is worth if you never did the valuation? So the business valuation can be extremely handy when it comes to these type of situations when you have shareholders dispute or legal disputes.
Okay, you talk about shareholder dispute, legal dispute. Let me ask you a question. If an owner or one of the owners or a partner, if they are into divorce, settlement thing, would that affect? And second
Absolutely,
thing is, do you look into economic situation also, economic rundown, economic boom?
Yes and no. So let's look at it separately. In a divorce settlement, let's say if husband owns the business, typically, let's say the court is saying whatever you are worth, let's give half to the spouse. In that case, how much do you give to the spouse if you don't know how much the business is worth? So having the business valuation will help you knowing how much you are giving to the spouse, if it's a good deal or bad deal. Let's say if you own a home and own a small IT consulting company. Now the court is saying, let's give the home to the wife and you can keep the business. If your business is not worth at least the value of the home, it's not a good deal for you. So especially in the divorce situation, it can be extremely difficult not knowing how much the business is worth to settle on a divorce decree. Now, as far as the economic conditions are concerned or future of that industry is concerned, say for example, gas stations used to be a gold part. Gas stations are not seen that positively now in the market only because of these electric vehicles and a lot of the charging stations popping up. And a lot of states, say for example, the state of California has this mandate that by 2030, all vehicles have to be electric vehicles. So now the gas station in California may not have as much value as they once did. So you have to look at the economy of the industry. You have to look at the future of that industry. At the end of the day, as much as history is important, you are buying the future potential. Once I give you $1 million, how long is it going to take me to make that $1 million? How much money can I make when I sell this business? That's the idea here.
All right. So continuing that point and leading into the more serious discussion. Listen, not every single business would be very healthy. That means not every single business would be making a lot of money and have great numbers on their balance sheet and whatnot, right? Some businesses do need financial restructuring or what we call damage control. In the valuation, is there any scope rather for the suggestions on how to make this financial restructure and what to do to improve business?
It depends on the scope. Typical business valuation is all about how much is this business worth. But as a business owner, you can define the scope. You can ask the valuation expert, I want to know not only how much the business is worth, I want to know the 5 drivers that's making you create that decision, that's helping you create how much is the business worth. And then you can define the scope with the valuation expert, that the valuation expert will help you understand if you had this situation, if you had leveraged situation, your business will be worth more. Typically, and it's counterintuitive, typically the businesses that have loans are worth more than the businesses that do not have loan, because the debt is considered as a cheap option. So you have to, depending on the scope of the assignment, the valuation experts can help a small business understand how to increase the value of their business.
Okay, let's continue to touch upon another serious, points in this valuation: gifts and the wealth transfer. If there is, certain gift involved, wealth transfer in a business, how would that be, recorded in a valuation?
Absolutely. So the government has certain limits around how much you can gift throughout the lifetime. Let's say it's 13.99 million. Then there's another limit, if you remember, 19,000 for 2025, which used to be 18,000 for 2024, where you do not need any form filing. Now, take an example. Let's say you have a medical office. Your business is worth $1.5 million. You have 2 children. Every year, you can give them 1% to each child, and you are not obligated to do any filing. This is the easiest way to transfer wealth to the next generation without worrying about any filing, without worrying about any limit, without worrying about gift, estate tax filing. Take another example. The idea here is the 19,000 is a limit for non-filing. Not that you cannot do more, but you have to do certain filing. Up to 19,000, you don't have to do any filing. So calculate the value of your business. Your business is worth, let's say, $3.5 million. For each child, for whoever you want to give, if you give 0.5%, that's 17,500. Meaning, back calculate the value, whatever the value turns out to be for less than $19,000, you give that much gift to the next generation, to your children, and you don't have to worry about any sort of gift filing.
Okay, what about estate planning?
So from the estate planning, right now the limit is 13.99 million per person. You can do the portability filing, where you can do 706 filing, 706 form filing, where you can port the unused limit to the surviving spouse. So in total, we are looking at 27 point something million dollars that can be given to the next generation. Let's say if you have a business that's worth $15 million right now. You know, in your lifetime, this business will be worth $50 million because you are only 50 years old. You will be surviving next 20, 25 years. You will be working in this business, and this business will grow much higher than the limits allow. What do? You give that gift right now at 15 million. You can give that gift to the next generation through an irrevocable trust. And in that case, you're not bypassing the gift limit. Let's say if you give half of the business to the next generation or to a trust, under where the children are the beneficiary. In that case, you did not trip on the limit. You're only giving 7.5 million. The valuation, the business increase in the value under the trust in their name as opposed to you giving the gift. So estate planning is extremely important, especially for the high net worth client. Right now, for a couple, the limit is 27 plus million. If you are at a point where you own your net worth is over $10 million, you should consider estate planning.
Okay, very well. Now, after gift and wealth transfer and estate planning, here comes your favorite topic, which is taxation. How does taxation work after these two discussed topics in a business valuation?
Absolutely. So there are a couple of things we want our viewers to understand. First, when it comes to gifting, the tax filing obligation remains on the giftor, not on the giftee. So the person who is giving the gift is responsible to file and pay the taxes, whatever is applicable in their case. Giftee, the person who received the gift, is not responsible for filing and or paying the taxes. Second, you want to understand donation and gifting are two different things. Donation is giving money to a registered 501c3 organization. Gifting is your choice, whoever you want to gift. You can give gift to anybody. It doesn't have to be relative, blood relation, children. You can give gift to anybody. So when it comes to the gifting and the tax planning, you need to be cognizant how much gift you are giving. Common mistake, a lot of people will give, I'm giving 10% to my son or 10% to my daughter, not knowing their business was worth more than $500,000. In that case, this gift is considered as $50,000 worth of gift. And they did not do any gift filing. They did not do any filing in that regard. So that creates a situation. So make sure you are doing this 709 filing. It's not complicated. And there is no tax liability for most people unless you have already crossed the gift limits. But if you are giving 10%, especially when it comes to change in business ownership, giving business interest to the next generation, to friends, family, make sure you do the business valuation first. Make sure you know the value of that gift so you can properly report on 709 filing.
Okay, all right. And when it comes to valuation, of course, a little bit earlier, AJ talked about damage control or financial restructuring part, right? So that actually leads me to a next question is that if business is looking for growth and expansion, how would that be mentioned in the valuation?
Absolutely. So all valuations are futuristic. You have to see what the future plan is. We typically include the next 3 years, if not 5 years, financial projection. We'll have to include the basis, the assumptions that we are including in that projection. These projections cannot be, let's increase 5% every year, 7% every year. What's making it increase? And how is it justified based on the history of this business? What actions will you be taking? Will this business be sustainable when it grows to the extent it will grow in next 5 years? That all goes into the valuation report.
And of course, you have to look into the competition as well, right?
Absolutely,
you have to
100%.
All right. So now here comes, the last thing as we are just, very close to end the show. After this, the growth and expansion, let's talk about business interruption claims because there are, possibility that business could be interrupted. How is the insurance company and other things fall in that place?
Absolutely. So business interruption claims or business liability claims or loss of reputation claim, all these claims are decided by the value of your business. Let's say if you have somebody trying to use your trade name or your business got interrupted for a CPA in the tax season, unless you know the value of your business, you don't know how much to claim. The insurance company doesn't know how much to pay you. So knowing the value of your business, and it doesn't have to be done every year, every so often. You have to do the value of the business, not only to keep track of it, but also to know based on the last valuation, what the changes that you made in your business, are they really helping grow the business value or not?
Okay, very well. So with that note, we come to an end of this week's episode. And of course, the highlight of this week's show was the topic, small valuation for the small businesses. Can it be a game changer? And now at the end of the show, of course, we know that it can be a game changer, and that's why valuations are important. And I just want to let you know, normally I say that for any tax matter, contact Science CPA Services. Yes, you should, and you certainly do that. But for your business valuation, you can contact Mr. AJ also. He's a certified valuation analyst, CVA, that you see it on the screen, 3 degrees, CPA, MBA, and CVA, and he can certainly help you with your business valuation. So do give them a call, 908-888-8900 or sciencecpaservices.com. AJ, once again, thank you so very much for your time.
Absolutely.
That was a very, very helpful information that you shared with us regarding valuation for small businesses. I am Sanjeev Pandya, wishing you all happy and smiley days ahead until we meet again, same place, same time. Do take care of yourself. So long.
Thank you.